Good morning, everybody, and happy Thursday. Gonna get started here in a couple of minutes. Hope everyone's doing well and you can hear me fine. Had a really interesting day in the markets yesterday, so we need to talk about that and then look at some of the opportunities as we head towards next week, which is going to be a very, very big week. I had a lot of phone calls yesterday with investors, hedge funds, family office, stuff like that. And we are probably going to do a special market prep session this Sunday, maybe around 7 p.m. Eastern time or so. We will update you guys on that as we get closer to it. Let me just make sure the audio is working for everyone, and then I would say let's get started here in the next minute or two. As usual, I like to start about 2 minutes past the top of the hour just to give everyone a little bit of time to log in. That's typically why we wait a couple of minutes past the top of the hour here. But I've got a whole lot of stuff I want to go through. Actually, really the top three things, but very, very, I would argue, important stuff here today. So we are going to look at that here in just a minute. As usual, if you guys have any feedback on our morning show, please do let us know. We want to be able to constantly improve upon our morning show. All right. Good. All right. I think we're ready to go. Let's go. It's just about 2. There you go. There you go. 2 minutes past top of the hour. Again, good morning, everybody. Hope you guys can hear me well. This is our morning show. I'm Serge Berger from The Steady Trader. Set the Market is our morning show. We go through sort of the top things on our mind in terms of importance. And with that, let's get started. I want to really start with yesterday's action and what that is, in our view, telling us how things are potentially setting up here. First of all, let's also notice before we even go into that, we've been talking about this higher inflation for longer theme. It's a short, we've only been trading now for a week and a half or something like that, year to date. But the performance of the energy sector, it's like, twice as good more than twice as good as the next best sector, and like a crazy amount better than the worst performing sector. Technology stocks are flat for the year, again, week and a half of trading, right? So let's not make that too big a deal about that just yet. But energy stocks are up 8%. Now, energy stocks, of course, got sold into the end of the year. But what's really interesting, and this is really kind of what I'm trying to get to yesterday. So what happened yesterday? Let me show it to you through the lens of the price action in the S&P 500. Now, this is the futures contract, but it shows you essentially what happened. So the S&P 500 yesterday, on the back of the CPI report, basically moved. It was up 25 basis points going into that report. And then, let me make this better. Okay, hold on. I just messed everything up. My apologies. Here you go. All right, this is what I'm trying to show you. So this is what happened yesterday. We had the S&P 500 essentially rally. It all happened in a matter of seconds. You can see that right here. This bar right there, that's what happened when the equity market freaked out. And this is 100% algorithmically driven, as you can see. And the S&P within the first 5 minutes, really the first few seconds, was up 1%. And then it went up another, 20 basis points or so. And that's basically it. So, 80+% of the price action yesterday happened in a few seconds. Now, that's the equity market. The equity market has panic. Everyone's in the same few stocks. We are going to talk about that a lot more on Sunday. We're going to probably go live on Sunday evening, Eastern time. You guys will get an email on this once we decide on this a bit later on today. But I want to make sure we're prepped for next week. Next week, I think, is going to be an important week. We've got obviously the inauguration on Monday. Markets are closed on Monday. And yeah, there's a lot of things I think that could happen here. So we want to make sure that we have a good handle on it. But what's really interesting about yesterday, and why I don't think we're going to fresh all-time highs here, at least for the time being, in fact, I think we favor the downside, is what happened in other markets. So let's understand why the equity market was up yesterday, why the algorithms decided in 5 seconds, or probably even less, that this was going to be bullish for the day. Okay, why? Because the headline inflation came in a touch below expectations, and I mean a touch. However, at the same time, so this is the perverse part about the equity market, and why, to me, it's just typically not telling us what's really going on. Here is the other thing. So yesterday's best performing, one of the best performing sectors was the energy sector, and look at what the energy sector did yesterday, up 1.5%. So that doesn't exactly scream, oh, inflation's going away. And I've got another one even. One stock that we have been adding, and I'll give you a bit of a, I don't know, freebie is a dumb way of putting it, but like insight. We added a stock, an energy stock called PBF to our lineup in Inner Circle. So if you're Inner Circle member, you know we added this early this week. This stock was up 5.3% yesterday. Up a percent before then, and on Monday it was up 5%. So these energy stocks are not exactly a deflationary signal like the equity market essentially was celebrating, if you really want to get down to it. So the equity market was celebrating the fact that 10-year bond yields yesterday went from 4.8, let's call it, to 4.65. That's what the equity market was celebrating. But what was not celebrating that was gold, which, by the way, gold is up another 1% today, and gold has been telling us something very different. So the equity market, once again, reacting to immediate, gratification, panic attacks, Twitter clowns, calling this or that without any analysis. And gold, by the way, is, again, up another percent today, was up about 1% yesterday. And, again, if we want to draw lines, we might come to the conclusion that we're starting to maybe create a next leg higher. So my point is here, the long and short, that the equity market yesterday is once again celebrating and ignoring basically everything else that's going on. Now, the equity market, of course, depends on two stocks, the U.S. equity market, and that is Tesla. So I'm going to go a little bit deeper, and I'm going to give you a bit of a preview of what we're going to, among many other things, talk about on Sunday in our update session. Again, we'll send out an email when we're ready for that, once we decided on that. But here is just a bit of a look. So let's have a look at Tesla, and let's then also have a look at NVIDIA. These are the two stocks that, in my view, are basically what are going to dictate the fate of the S&P 500 for the time being. So this is Tesla, and let's just add in NVIDIA for fun. NVIDIA is giving us a lot of reason for concern, not because we think that stock's going to crash, but it could stop going higher, and that's enough to cause a lot of problems for a lot of people. Not even because of fundamentals necessarily, and that's the thing that I think a lot of people are either not wanting to hear or just don't haven't been exposed to that thought process. So here are two stocks that you will want to, in my humble opinion, watch very closely on the weekly charts. From a valuation perspective, Tesla trading at, I don't even know what the forward is anymore. It's so crazy. And then NVIDIA, of course, doing its thing, which is growing at a decelerating rate, by the way. Like NVIDIA, good company. Let me be clear, but it's growing at a slowing rate. So I'm watching this very closely. If these two stocks start to crack a little bit, the S&P will simply not be able to hold up, and other parts of the market are going to act a lot better. We're still thinking energy and the healthcare, and no one seems to care about those sectors. Retail, the investors don't even know what that is anymore. That's exactly probably why there's a lot of potential there. So that's what's going on there. So we touched on the price action yesterday, the concerning price action in the equity market. So I'm not really trusting this just yet in terms of to the upside. Gold. And more and stock and energy stocks basically telling us a completely different story yesterday. So let's let's have a look at this a bit more closely as far as one more stock goes that I think is going to also give us a really good read for what might happen going forward, because we're going to have a lot of headlines next week, a lot of executive orders. I think that's been well telegraphed as the Trump administration gets sworn in on Monday, and so that's what is on mind here, is watching some stocks that are going to be sensitive to this. One stock that I would watch very closely is Walmart. Now, Walmart is a stock that I'm going to give you the chart. Where did I put the chart? I made a chart here a minute ago on here. Let me see where it is. I think I might have downloaded it. Let me see. Give me 1 second. I want to show you this chart. Oh, crap. Walmart is trading at 35 times forward earnings. Let me show you this. So this is Walmart. Here. All right. So forward earnings. So this is basically forward, PE. For Walmart is currently 30. There's too many. Walmart is no longer at a growth juncture that it was back then. So it's a whole different picture. So this is the valuation part of Walmart. I know no one really gives a shit about it, but it's actually very important in this. Just to give people an idea, Walmart, right? Again, it's not NVIDIA, trading at 30 times forward next year's earnings. Now, if you look at the stock, just let's start doodling some lines and see what we might be able to come to. Now, I will tell you that when I look at Walmart, from our momentum indicators, I have the stock now. It's early days, but it's it's starting to break our initial breaking into initial bearish momentum, and you can see when it went into bullish momentum, which happened back in August, the stock then ended up rallying 30% in a straight line, and that's what got it from, I don't even know, high 20s in forward PE to the mid 30s now. But now things are changing, and momentum, as you can see, started going bearish momentum. That's not the stock sucks. It's just an initial warning signal. So very much like the broader market, the sort of mid-December lows in this stock and in NVIDIA and in Apple and in the S&P 500, which I want to get to in a minute, once again, are important. So momentum in Walmart, and this is now taking the big picture, which I hope you guys can kind of appreciate the thought there. And if you have questions, please let me know. That's what I'm here for. The big picture here is, why is this stock trading at 35 forward earnings? Well, the reason is probably a lot of optimism about things that might be happening going forward from a U.S. economic perspective. However, there's a little thing called tariffs. So let's assume for a minute that we're going to get tariffs from China, which is probably not that outlandish a thought process to have. And the question is, is it on different articles of different consumer goods or different whatever, industrial goods, whatever, or is it just like across the board? The latter would be more problematic for something like Walmart. And so, Walmart to me is one that's heavily exposed here to headline risk going into next week, trading at 35 times forward earnings. Again, I'm giving you our real-time price action here. You can see we got a buy signal in momentum in August. That finally broke to bearish momentum on December 31st. And it remains bearish momentum. So this bearish momentum signal remains intact. So Walmart, I would watch this very closely. I think this is an important stock, and I would not be surprised if this stock from here has 20-30% downside in not too long a time frame. That's not because it's a horrible company, but it's, in my view, getting mispriced for the risks we have from going forward, and a lot of good things have been priced in. So and this is an important stock, right? This is an important stock. There's not a little crap stock that no one cares about. A lot of people care about this stock. If you are using the TST Trender Indicator, which I really hope you are, because you can see how awesome it is, watch this closely and watch the signals. Again, it's bearish trend now, and the S&P 500, which I want to point out as well, has the same levels of importance in terms of the timing. So we've been talking about these levels in the S&P 500, which are basically 580 on the SPY. It held earlier this week, then the equity market freaked out and the algo was bought, and all in a few seconds. That explained, 80-90% of yesterday's price action, and now we're here. But again, we need to break 580 for this market to have more downside momentum. We're in a chop zone. There's no doubt about it. We have a price action range here that is, on the upper end, it's basically 610 on the SPY. On the lower end, the meat of it is basically between that and 580. I know it went a bit lower there in October, but that's pre-election. So we're in a trading range, and there's not a whole lot of momentum here to the upside or to the downside unless you're looking at energy. Energy stocks, we've been talking about this now for some time. I just mentioned PBF, for example, which we are long in Inner Circle. You can see we had a bearish momentum signal there, then that stock dropped 20%, and now we're having new bullish momentum on the upside. So momentum is going to be, I think, what's going to make money this year, but don't let momentum be mistaken for, I'm going to buy this stock because it's down 5% and because someone on TV said so and it's NVIDIA. I think that trade is over. I think we have to be much more, thinking like actual investors and trading accordingly the opportunities that we see. So, by the way, if you don't have the TST Trender, make sure you reach out to support@thesteadytrader.com. It's just $397 a year, and you're going to love it. I day trade with it every day. I use it for swing trades and even for the investment time frame. So if there's no questions, we'll leave it at this. I hope this is helpful. Again, this is our Set the Market Morning Show. Please subscribe to the channel. Give us a thumbs up like so that we can keep the show going. And if you subscribe to the channel, it's obviously free, right? You will be alerted in real time when we go live. Even, for example, maybe this Sunday when we go live with a prep for this coming very, 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 very important week ahead. So thanks for joining. Have a great trading day. Any questions, always let us know. And again, if you don't have the Trender, support@thesteadytrader.com. Take care.